You want to learn how a rate hold could potentially saving you $1,000? This piece of paper right here, something like this could be potentially saving you thousands of dollars. Let's actually jump into what a rate hold is. Now, a rate hold is something that gets done when you're actually doing your pre-approval. Now, there's a difference between a pre-qualification, just going into the bank, you get a pre-qualification, and if they do a credit pull, they'll be able to hold a rate for you. But can you actually qualify for the amount that they've told you? Now, when you work with a mortgage professional, we're going to be taking all your documents in, and we're going to make sure you're actually qualified. We're going to be looking at your income. We're going to be looking at your down payment. The next thing that we're actually going to be paying attention to for you is what's actually happening in the market, because we actually can figure out what's going to happen with fixed rate mortgage. We're not talking about variable rate mortgage here because that is based on the Bank of Canada and prime rate, but we can actually look at what's happening with fixed rate mortgages based on the bond yield. Now let's actually look at some of the data here. Now we actually can go and look at what's happening with our market right now. We have really high fixed rate mortgages. We have really high bond yield. Now, if we also go back and look at what was happening in March, we also had really high bond yields. We didn't know what that was going to happen with the Bank of Canada, but then the bank started collapse. Now this is where the bond yield started to drop, and guess what? Fixed rate mortgages also started to drop. We had some fixed rate mortgages around 4.2%. Now for the last 2 months, we've actually been seeing some very low fixed rate mortgages because we've been sitting around 2.8 to 3% on the bond yield. But guess what happened in late May? Well, we actually got the inflation data for April, and in Canada, it actually increased by 0.1%. Now you'd think 0.1%, but this means there's going to be upward pressure on the Bank of Canada to further increase interest rates. Now, this is where we're going to show you how we save clients thousands of dollars. This is not something that means it has to happen today. This is something you want to make sure you're paying attention for the future. This is something that will last forever, because you can look at what's happening with the bond yields to figure out what's going to happen with fixed rate mortgage. Now, on April 19th, this is where I was able to save clients thousands of dollars. I'm going to show you. If we went and look at rates right now, they're ranging anywhere from 4.99 to 5.09. Some of these lower rates of say 4.59. Now this is a credit union in Alberta. You actually have to have a live deal. You can't just go and say, hey, I want to put a pre-approval and get a rate hold on this. There's certain products that are promo rates. You can't do it unless you have a live deal. Now, in this scenario, we're going to be looking at what rates are at 5.09, and we're going to show you how we save clients thousands of dollars because we were able to get rate holds for them when bond yields were still lower. We did know that they were actually going to be increasing. And guess what? We know this from bond yields, but as mortgage professionals, we also get updates when the lenders are actually going to be increasing their fixed rate mortgages. We get notice the day before, and we get sometimes only a couple hours to get rate holds in. That is our job for our clients to make sure we're saving them. Now, in this case here, these clients got a rate hold of 4.69. Now, the time they actually had an offer in on their place, now the bank would have been calling them saying, hey, are you going to put some offer on a place? Oh, you got an offer. Hey, we got a rate of 5.09. Well, we were able to get them a pre-approved rate of 4.69. If we actually look at the math of what it would cost them in difference, their mortgage amount is $530,000. We're looking at a 5-year term and a 25-year amortization. This would have cost someone nearly $9,000 if they were to get the same rate today, because rates are at 5.09. And the sad thing, I've spoken to a lot of people the last week that didn't even know that they could have got a rate hold put in place, and they planned on closing the next month or two, where if they had someone that was paying attention to what was happening in the markets, they actually could have saved themselves thousands of dollars. Now, this is our job as mortgage professionals. We're meant to be paying attention to what's happening in the market for you. We should be updating you saying, hey, you know what? Fixed rate mortgages are going to be increasing. You do have to have a credit pull to actually do a rate hold. But is it worth it to save you potentially thousands of dollars? That little damage to your credit report, it's going to happen for 1 month. It's going to then go right back up. But you could potentially be losing thousands of dollars if you didn't actually get a rate hold in. Now, if your bank or your mortgage professional isn't doing this for you, you need to really be thinking about what are you doing. You need to have someone that's in your court for you. Now, if you want to find out more about stuff like this, please like and follow, and I'd love to share how we could save you even more money. This is just one part of our job, is watching what's going to happen with bond yields, but we have a lot of other ways that we can show people how they can save thousands of dollars with their mortgage.